Hey there, everyone. How's it going? Just a pre-market check-in this morning. I want to see how the markets are going, share with you how I think they're going to go throughout the day today. And then more importantly, I want to look and see what is coming up for us next week and how I think that's going to impact us going forward, what we should be watching for, and how that carries forward through the rest of February into March, given our current market conditions and where I think the market's going to go from there. So I'm going to keep this quick for everyone. I'm going to keep it moving. If you want to hear more of my commentary, check out that Patreon down in the description. You can sign up, come on over, be part of my community, chat with me on my personal Discord. With that said, I'm Dr. Stock, Doctor of Education. Let's get right into it. All right, so on the chart that you're looking at right now, I currently have the SPY up here, and this is not showing pre-market, although I'll show that in a moment. We have, I mentioned in my video yesterday, about 2% to give up if we finish lower today. And that is my expectation, is that the markets today, people will be closing out their positions prior to the long weekend. And I think that we close in red. And that really puts the pressure on to next week if we're looking for signs that we're still in that bullish sort of uptrend, or if we continue to retrace back down to lower levels before possibly that next run up, or maybe we keep going down. We're going to have to talk it out and talk it through and see what sort of directions, what's going to impact that direction, I should say. So I think that we have about 2% to give up, taking us down to about that 4,000 mark in the S&P. And that to me would be the most bearish case for the day, barring any sort of news that would be unexpected. So if we look intraday right now, the markets are currently down, or the S&P is currently down about 0.7-ish%. So, or I should say the SPY is. The S&P is going to be close to that, and that puts us currently at 405 during the pre-market hour. So we'll see if when the market opens, if that rubber bands back up into that support area, into that previous area that we had right around 408. Time will tell. We'll have to watch that happen. I think we closed at about 4090 yesterday. I don't think that we break 4,000 going into the weekend. So like I said, I think 2%-ish down is about as much as we'll see in the SPY. I do anticipate that we close lower, and if we close higher than that, well, then I'm wrong. But I do anticipate, because of closing out the week, locking in those gains, closing out options prior to having 3 days of time value bleed away on people. I think we're going to see a lot of volatility. But like I said, I think that we do close lower today. Looking at the Qs that tracks the Nasdaq 100, this one actually has a clear area of support down here just below 300. And I think we could give up 2, maybe 2.5% in the Nasdaq today. And I think, again, most bearish case just for the day, I think that we close down from here, from where we're at. Maybe we come down to this this most previous low, this where we had the bottom of this candle, or the top of these peaks over here. And we can zoom out a little bit and see where else that puts us. There's usually another area that's right around there, maybe going all the way back, holy cow, to March of 2021. But I think the clear indicates that we have our forward. I think locking in here, looking in here. If the SPY goes down 2%, which, remember, that's my worst case for the day, then the Nasdaq being down 2.5 to 3% would be reasonable, because it typically moves a little bit more than we see with things like the Dow Jones, the S&P. So that's what I think for the Nasdaq, based off the cues that we see here. And let me go intraday real quick. There we are. And we're already down about 1%, but it's pre-market trading. So we're going to have to see when the real volume hits, when the market opens at 9:30. And we'll say 9:35. Usually give a few minutes for the market to kind of settle in. Maybe even by 10 o'clock, we start to get a better direction of the markets. Now, yesterday at about 3 o'clock, we had quite a bit of a sell-off in the markets. They were actually doing all right up until that point. And then with the hot PPI numbers that we got, on the back of the CPI numbers that we got, we have talk from the Fed that, maybe a 50 basis point raise is more appropriate. And with that sort of statement being made, the markets really reacted. So further rate hiking, leading us up to a higher target rate for the federal funds rate, that was a scary thing to the markets. And they reacted by dropping. So we'll see if we get more of a drop that could also impact not only people closing out their positions for the weekend, locking in any sort of gains, they could also be protecting the downside. Should we see further pressure from that? It could be that we see that the scariest part is over, that there's that immediate reaction, and now people are reestablishing positions. But I think it's more likely that we see a further drop today. And that leads me into the next part of this, which is what's coming up in the next week. So next week, we get our second estimate for GDP, which currently is sitting at 2.9. And it'll be important for us to see, as that estimate comes in, are we seeing an upward adjustment, an upward revision up into 3%, 3.1%? Do we match the 3.2% that we had in Q3? So we'll have to watch that. Getting those strong numbers for Q4 might help us to discern what's going to happen for Q1 of this year. And currently, with the strong consumer that we have and the tight labor market that we have, it is possible that we see stronger numbers coming out of Q1 than we initially expected. With the student loans coming up later, with inflation still running a little bit hotter than we thought it would, not moderating as much as we thought it would, we're going to have to really watch March. We're really going to have to watch the earnings that come out after Q1 and listen to the guidance that those companies have, putting us through the rest of the year. I think that will further illuminate what to expect. It is possible that for Q1, that we're not in a recession and that we run either just a little bit cooler, or maybe when we did better than we thought for Q1. We're going to have to watch that. Student loans, I think, are going to be a real drag on the economy when they hit. And in my live stream with Stock Moe yesterday, I talked a lot about that and talked about the debt numbers that are coming out. And you can go back and you can watch that. I'll put the link for it down in the description. So we have GDP coming out next week. We also have personal income and outlays coming out on Friday. And with that comes PCE. And we want to watch personal income to see how that's trending, to make sure that that's moderating, that we don't see really high numbers like we had back in October of 0.8. We want to see more of these 0.3, 0.2. That would be a lot more comfortable to watch that happen. Also, disposable personal income, we want to see those numbers moderate as well. And then getting into the PCE, down here we'll go to the index numbers that we have, 0.1 and then 0.3 for core. Core being the less volatile of the two. That one's probably going to stick around between 0.2 and 0.4. If it comes in cooler than 0.3 or at 0.3, I don't think there's going to be a lot of market reaction. Although in light of CPI and PPI, maybe a more regular reading that's closer to an inflation rate of 2% is going to be more bullish for the markets, because it's finally a good sign that the Fed, looking at the PCE like they do, gives them more of a number like they want. If it comes in 0.4 or even 0.5, which would be incredibly high for core PCE, that to me, it should be bad for markets. And I know I said that about CPI, but this would be the third piece of information that we have since the Fed had their meeting in January 31st and February 1st. This starts to make a chain of evidence. And so we want to see, is this a chain that continues making those links, or is it part of the chain where the link is broken? We're going to have to watch that as it comes out and help us decide the future direction. We need to be careful over headline numbers, because looking at the year over year numbers that we have for PCE, CPI, PPI, when they come in below what they were the previous month for year over year, then you get headlines that say that inflation is still coming down, that it's moderating, but yet you have hotter than expected month over month numbers. So that's evidence to the contrary. So we got to be careful, because for year over year, a lot of that inflation has already been baked in, and it should peak around June for the year over year numbers, which means that we should see a decline as long as the month over month numbers that we have are fairly stable to ordinary. We can actually run a little bit hot on those and still make it look like on a year over year basis that inflation's coming down. So be careful not to fall into that trap. The last thing that we have coming up at 10 a.m. on Friday is the final February data coming out through the Survey of Consumers for the University of Michigan. We want to see how those numbers settle for consumer sentiment. Even more importantly than there, we want to hear about the consumer, whether or not they're worried about economic downturn coming up. Are they holding on to their money instead of spending their money to slow down the economy? That could be good for inflation. It also does potentially drop GDP. So we want to be on the lookout for both of those two things. And also, the biggest thing for consumer sentiment that I think is going to immediately impact markets is the sentiment on inflation over the next year. If that number adjusts upward, I think that the market could go red on that news. And also the 5-year long run rate for inflation, if that also moves off that 2.9, if that unpegs from 2.9 where it has been for a while now, that is also something that if it goes upward, And I don't think it comes down. If it goes upward off that 2.9, that could also be seen as further negative news for next week. So let me summarize this. We have GDP, we have Fed minutes, we have jobless claims, we also have PCE through the personal income and outlays. We want to watch that. And then finally, consumer sentiment. And all of that, we want to be watching for the strength of the economy and the state of inflation. And that also allows us to set up a better plan for February's numbers that come out in March. So for this week coming up, I think that we see a little bit more red in the markets, assuming that the news that we get and the tone that we have is still the same as it is now, that we finally start to retrace a little bit from the levels that we've been at. And then the end of February and the beginning of March are going to be telling us, are we going to continue to drop from there, or are we going to bounce off, maybe at the very least that 50% retracement mark? I'm sorry, I should say at the very most that 50% retracement mark, and then continue the rally that we've been on. We're going to have to watch as those reports come out. I think best case scenario, we watch that rally happen through the end of March. And then when the Q1 numbers start to come out from companies, that's really going to tell us if we're continuing the bear trend or if we start to really turn things around into the full-on bull run. Unfortunately, I think that bear case is the more likely of the two, just for a little while, for 2023. And maybe we even see a little bit of a sideways market action taking place. I'll keep my fingers crossed, though, that it's better than I expect and that we continue the bull run that we're on. That's what I have for you guys today. Thanks for watching this video. I really appreciate you listening to my commentary. If you'd like to hear more of what I have to say, please, down in the description, see the links that I have down there, especially the one from my Patreon. Come over, be part of my community, interact with me and my community members over in the private Discord, and check out the research that comes out as I put it out on the Patreon. Thank you guys for watching. I'm Dr. Stock, Doctor of Education. We'll see you in the next video.